Hello and welcome to Hot July. I'm late in sending this video due to the heat dome. Not really. I was on vacation at the beginning of the month and had to catch up. The old calculation, 1 day off takes 2 days to catch up, and I was off for more than 1 day. So if you can't tell, got a little bit of tan going on here, thankfully. So I know you've been eagerly waiting the update for the first half of 2026. So without further delay, 2026 unexpectedly has been pretty good so far. Markets up above average. We're just shy of 10% as of the end of June for the S&P 500, which we generally get about 10% on average if you look long term for the S&P 500. Again, an all stock portfolio of Fortune 500 or large cap stocks, right? So far this year, tech was not the leading sector as it's kind of been. We actually have seen some weakness here in tech. The AI boom, if you will, is maybe losing a little bit of steam. We'll see. We're keeping an eye on it. But energy, not surprisingly, has been the best returning sector. As we've seen oil prices and gas prices go up here, right, with what we have going on overseas. So, but surprisingly, right after that, industrials have been a close second, which manufacturing, right? Manufacturing has been a close second to energy so far this year as far as return. As far as all around the world, Korea surprisingly has provided the best return. They're kind of beating everybody as far as their markets are concerned. With Taiwan right after them. So we obviously want to look globally, not just here in the United States. China's been kind of one of the biggest laggards. Again, not much of a surprise there. We've been kind of hurting them a little bit with what we have been doing overseas as well. Their markets are down almost 14% so far this year. So the stock front doing pretty good. Bonds, pretty flat, no real changes in interest rates. Obviously, we have a new Fed chairman. He hasn't really been doing much so far. We haven't seen rates go up. We haven't seen rates go down. They're definitely in a wait and see mode here, which kind of brings us to what we've been seeing, on the bond side of the portfolio. Our portfolios have been actually performing pretty well. We do like to look forward, and we did make some changes to increase our international allocation and mid and small allocations, and both of those have been outperforming their large cap domestic counterparts here. So our portfolios have actually been kind of punching above their weight, if you will, as far as returns. So that's good too. We like seeing that. On the economic front, we're kind of creeping along. The target GDP or economic growth rate of about 2%. We've been coming in slightly above that. 2.1% for the first quarter, looking like the second quarter will probably be about the same, although we won't get that reading until the end of July. So you'll have to wait till next month for me to tell you what that actually looks like. We're still seeing, a little bit of weakness in the employment, environment. Job creation has kind of been slowing. Labor force participation rate lower as well. We're starting to see more of the kind of the baby boom generation continue their retirement, and there's just not as many folks population wise behind them. My generation. Millennials, Gen Z, all of those acronyms, right? There just aren't as many. So it's probably not a surprise that, there aren't as many folks to come in and take those jobs. But of course, we'll keep our ear to the ground there too. Inflation's heading in the right direction, down. Mainly here recently due to oil and gas prices coming down, although that's an up and down story. We saw in June about a 10% decline in gas prices, so we certainly like that during the summer driving season. But obviously that's a depending on what the Strait of Hormuz is doing every day, kind of goes up and down, right? So we definitely can continue to take a look at that. But we did see some improvement in business and consumer sentiment. They both improved in June, so we like to see that as well. People are generally feeling a bit better, which leads to more investment. So that's good too. Of course, on the negative front, we still do have our geopolitical issues and what we see going on overseas. Seems like 2 steps forward, 1 step back there, of course, but we're not seeing, a lot of that volatility show up, other than in energy prices. Thankfully, the rest of the market and economy just kind of continues to march forward. So from our standpoint, right, we're still seeing more opportunities than risks out there, which is good, right? No big, glaring issues that might, lead to a market decline. But of course, market volatility is very normal. So we kind of roll with the punches there. We did today. So today we actually, you can see I'm in my office in Southfield. We had our partners from First Eagle Global. You might see in some portfolios we hold them as part of our diversified allocation. They're a global investment manager. We've had them for a couple of years now in the portfolio, and due to kind of our size and where we are, not only do we have our own investment committee, but from time to time we bring other investment committees kind of in to see what they have to say. So they were, in the office today, had some very interesting things to say to us, and kind of giving us their global, outlook on things and things that they have done inside of their portfolio, and also a pretty interesting conversation on gold, as they have a pretty hefty allocation inside of their portfolio. So yes, we do own gold inside of the portfolios. You don't necessarily see it, but they're one of the largest kind of allocators inside of their fund as a hedge. So very interesting conversation around there. If you'd like to know more, obviously I'd be happy to share some of that with you. A little bit too long for a video like this, so I wanted to keep it a little bit shorter here since I'm a little bit late. So other than that, last half of the year is coming up. We'll see what that brings. As always, if you need anything, please reach out. And in the meantime, stay cool out there. Another heat dome upon us. So take care. Thank you very much.